Hello everyone, hi, welcome to the channel of Wall Street Mojo. Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon. Friends, today we're going to learn a concept which is known as debit note. It is more related to the accounting part, the debit notes accounting over here, and we'll be looking at some of the trades. So let's begin. As you can see, there's a box over here and it has some details. Let's try and interpret that. The debit note is sent by a purchaser of the goods, the person who has purchased the goods to the seller of the goods. The reason for sending the debit note is intimating the seller about debiting the sales account. Okay, no idea? You mustn't have got the idea regarding what exactly is going on. Okay, no issues. We'll learn that. What is exactly debit note? That's the first and the foremost part that we should learn. Now, debit note is sent by the purchaser of the goods to the seller of the goods, right? And the reason for sending this note is intimating to the seller about debiting the sales account, right? So the debit note can be sent for various reasons. The most important reason is the purchase return. When a percentage of the goods have defects, then the purchaser sends a note stating that they would reduce the purchase account by such percentage or certain percentage. Second, another reason for sending this is when the purchaser is overcharged for the goods not sold. So it may happen that the seller will erroneously inflate the buyer's account, and by sending a note, the seller is intimated about the same. The third reason and the last reason for sending the debit note is just the opposite of the above reason. It is when the buyer's account is undercharged. Okay, I'll write over here. The buyer's account is undercharged. Right? Over here, it is overcharged. So the over here, then also the purchaser sends a debit note to the seller when this kind of situation occurs. Now, let's learn the accounting part of debit note. See, to understand the concept of the debit note, we need to dig deep. I mean, that's why we will see, how it affects the books of accounts of both the buyer and the seller. Let's take a very simple example over here. Let's say there's a company called, I'll take on the next sheet. Let's say there's a company called 𝐃𝐞𝐿, and they have bought goods worth of, they have purchased goods of, let's say, $40,000. Everything is in dollars, right? From let's say 𝐾𝐾 Inc. So basically, there's two party, KG Inc. and 𝐾𝐾 Inc. Right now, the KG Inc. basically finds out that 2% of the total goods that have been purchased, that is 40,000 of 2% of 40,000 are defective. So KG Inc. has purchased from KK. This is the, if we calculate 2% of this as defective into 2%, so 800 is closely as a defective portion. MNC company would issue over here, it's a KG Inc. company, a debit note, okay, stating the same, that this part is defective. Now, what would be the journal entry in the KG Inc.'s books of accounts? See, first of all, we'll pass the journal entry, and then we'll investigate why we pass the journal entries. Okay, let's pass the journal entry. We have the KK Inc., which is your seller account debit. We have to debit that amount, right, to the extent of 800 to your purchase, because you have to reverse that account. The initial purchase that was debited now has to be credited. Okay, so once you credit 800 over here, you have reversed the entry. Now, to understand this, we need to go back to the time when KG Inc. purchased the goods from the KK, right? Now, since KG purchased goods worth of $40,000 from KK, the journal entry would be something like this. This is very initial end when the when the goods were purchased by KG from KK. So the purchase account will be debited over here. The purchase account debited to the extent of 40,000 to the KK account, because we take it as it, there is no cash that is involved. It was a It was a debit transaction that has happened. No cash has been paid. Here, purchase account is debited because the expense has increased, and the KK has been credited because the liability has increased as the KK Traders is the seller of the goods. So the KK Inc. is the seller of the goods, and this is the buyer as we know it very well now. And that's why we have credited the seller. Now to minimize the purchase, because there is a defective product found, we are reversing the entry. We are reversing the entry only by the amount which is defective. So 40,000 was absolutely correct at the initial end. But then to the extent of 800 was defective. So we have reversed to the extent of 800 into the purchase account as well as the seller's account. So then the purchase account has been credited. For the defective amount is actually a purchase return, but as a purchase can be reduced from the multiple reasons and it can be issued for various causes, we won't credit the purchase return account over here. Okay. Now many argue that the purchase return account should be credited and not the purchase account. See, there is an accounting explanation for that. If we take the same example, we'll see that the entry of the purchase account would be something like this. The purchase account debit to KK, right? 40,000 to the extent. Now, if there is a 2% defective rate over here, that is 800, right? So what we have to do, we have reversed the case. The KK Inc. to purchase. And we'll have to make another entry over here as something like this. The purchase account debit to the extent of 800 and to purchase return. This is the entry that needs to be made if we go by that argument, right? So doing this will create a right effect in the ledger as a result, and the business will be able to enter the similar effect in the final accounts and the balance sheet as well. Now, let's understand, we have really got into the example part, but we need to understand the characteristics part, that is the traits. Now, as we have understood that what a debit note is and how the accounting entry is passed, we'll look at the most significant characteristics of the debit note. First, it is sent by the purchaser, right? So debit note is always issued by the purchaser. So the purchaser wants to inform the seller that the seller account is being debited due to the particular reason. And the reason is also mentioned in the note along with the intimation of debiting the seller's account. Second, the purchase return book is affected. Now, after issuing the debit note, the credit purchase is debited, is reduced, and the purchase return is increased. So what has reduced? The purchase has reduced, but what has increased? The purchase return has increased. So the definite entry would be to reduce the purchase first and then pass the entry where we will debit the purchase and credit the purchase return. That's what we did over here, right? Now, the third part, it is done only on credit purchase, right? When the purchase buys goods on credit and he feels that the amount of the purchase needs to be reduced due to one of the many reasons like defective products, and honestly increasing the purchase amount, etc., the note is actually issued over here. Now, fourth, it is positive for the purchaser. Now, it is positive for the purchaser because of the reason the purchaser would need to pay less due to debiting the seller's account, and that's why the amount which is debited is called the positive amount. Okay. The fifth, the result of acceptance, right? Only when this note is accepted by the seller, a debit note has a value. Because after the acceptance of the debit note, the seller issues a credit note over here, which states that debiting of the seller account is accepted and the seller will also make necessary changes in his books of accounts. So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you, everyone. Cheers.